You must have got these messages on WhatsApp or maybe a post on your Facebook or LinkedIn saying that so and so stock became 50 times, 100 times, 150 times in last 10, 15, 20 years, right? And you dream of having these stocks in your portfolio also. Yeah. Now, instead of just reading these messages and posts, if you really want that you should also have such a stock in your Demat account, this video is for you. Hi investors, and welcome to a very interesting video on how I made 100x in this one stock in last 13 years. Now, as I said in the initial part of the video, we all have this desire that why not I also have this kind of a stock in my portfolio which becomes 20, 30, 50, 100, 150 times, right? And why just one stock? Why not more than one, right? Now, there is something called information, there is something called temperament. So I'll talk about both the things, and I'll talk about the approach which I applied while staying invested in this stock for so long, which gave me these multi-bagger kind of returns. Yeah. So to start with, let me open my screen and I'll show you some numbers. So the company I'm talking about is Supreme Industries. Now, if you know what this company does, what industry it is into, or what kind of products do they produce, please pause the video and write in the comments box. Coming back to the video. So the answer to the question which I asked was, it is into plastics. Now you might have seen plastic furniture of Supreme, chairs and tables, right? But this is the B2C product which we usually contract with, or we have seen or used maybe. Most of the products of this company are B2B. For example, the pipeline in your apartment or in your house, most likely it is by Supreme. It is one of the players. Then the dashboard or the laptop, the desktop you are sitting with, the plastic body part of that, there is a good chance this is by Supreme. The dashboard of your car, Tata, Maruti, Honda, if I remember correctly, these companies have got some exclusive tie-up with Supreme. So the dashboard, the plastic body part of your car, again Supreme. Another example. If you've seen this tarpaulin on trucks in rainy seasons, they have this blue and black sheet on the trucks when they're transporting some goods to save themselves from the rainwater. That again, the plastic is by Supreme. Watch closely these Coca-Cola crates, that blue color crates that 24 bottles can be kept. Look closely, most likely it is by Supreme. I've also noticed in some of the cities, these dustbins are installed in every few meters, 100 to 200 meters or maybe more. Most of them, a lot of them, if not most of them, are again by Supreme. Yeah. One more example. If you read about construction of a dam, at the bottom of the dam there is a plastic lining. Now, why is this plastic lining? So that the water does not seep in and becomes underground water. Then the purpose of building the dam will be defeated. That plastic lining is again by Supreme. So they have got all this is B2B. If you notice, what is B2B? Business to business. And what is B2C? Business to consumer. For example, furniture, right? So most of their products are business to business, and they have got more than 5,000 SKUs. SKUs is stock keeping units, different variety and different kinds of products. Yeah. So it's a huge range of products they have got with themselves when it comes to the plastic industry, right? Now let's look at some numbers of this company, and then I'll tell you our journey into this investments. So if you look at from 2004-05 till 2021, that is the latest available annual report, look at the revenue growth. From 931 crores, it has gone to 6,300 crores in last, 16 years. Yeah. If you look at the profit, from 23 crores, it has gone to 978 crores. And the most interesting part, look at the dividend payout. So for example, in the first year we are looking at on the screen, 2004-05, 23 crores was the net profit, out of which more than 50% was given out as dividends, that is 12 crores, and the company was left with around 11 crore rupees to further plow that money back and put it in the company for expansion. Next year they made a profit of 39.95 crore, out of which 13.81 crore was given out as dividend, and remaining was again retained by the company, and so on. So if you look at the payout history of the company, most of the time it has remained above 30% dividend payout ratio. So whatever there is a net profit, out of which more than 30% is going out as dividends, right? So this is the story of the company in terms of revenue, profits and dividends. Now, We started investing in this company somewhere in March 2009, and the stock price was around 21 rupees or so, plus minus 21 rupees. Yeah. Within few weeks, few months, the stock price went from 20 to 30 to 40 to 50 and 60. The only thing which was holding us, forget about holding us, we were buying every month regularly. We kept on increasing our stake in the company, was because we were looking at the research, we were looking at the fundamentals of the company, and we had no reason to sell it. Yeah. Now, one mistake which people do typically in stock investing is the moment your stock is 20-30% in profit, you go and sell it. Because of this fear that what if I lose this profit also? So let's book the profit. So you end up booking profits in the good companies, and you keep on holding those companies which are actually in loss. So there's a saying, I don't remember the person, I think Warren Buffett or maybe Peter Lynch, he said this is like watering the weeds and plucking the flowers. Right? So you keep on watering the weeds, the loss-making stocks in your portfolio, and you keep on plucking you keep on taking out the flowers or the good stocks from your portfolio in the chase of booking the profit, and in the fear that of losing that whatever profit you have made. Right? Now, let's look at it in more detail in terms of the price appreciation and going up and down. Look at this chart. 2009 December, the stock price was 76.82, and the same year the lowest was 18.71. So this is the lowest and the highest in that same year, right? And we purchased somewhere in March 2009. At 21 is when I started purchasing this stock. In last year, 21 calendar year, the lowest price was 1687. The highest went up to 2612. So you can see the fluctuation, you can see the volatility in the stock price every year. And if you notice this for last 10, 15, 20 years, every year the stock has been fluctuating like this. It has gone up, down every possible year, right? Now, let's say someone purchased this stock at the highest price in 2009, 76.82, and sold it at the lowest price in 2021 after around 12 years at 1687. Right? That is the worst case scenario. You buy at the highest possible price in 2009, and after 12-13 years in 2021, you sell it at the lowest possible price of that particular year. Right? What is the best case scenario? You buy at 18.71 and you sell at 2612 rupees. That is the best case scenario anyone can have in these 12 to 13 years. Right? Now look at the next table. Look at the right hand side first. In the worst case scenario, you have multiplied your money by 22 times already, and the annualized returns of 32.42%. In the best case scenario, you have multiplied your money by 139 times and returns of 48.45%. So anyone who invested in 2009 in this company and stayed invested till 2021, their returns are between 32% compounded annually to 48% compounded annually. And the most interesting part is this is excluding the dividends which this company has given in these 12-13 years. So if I look at last 13 years, this company has paid 150 rupees per share. To again tell you give you some perspective, if someone invested 1 lakh rupees in this company in 2009 March, that 1 lakh rupees of principal investment, you would have got 7.5 lakhs in the form of dividends in last 13 years. And that 1 lakh rupees has today become worth around 1 crore rupees, because the share price right now is more than 2,000 rupees. So that's the kind of returns this company has given in last 13 years, right? So hold on, I'll tell you more about this. Now before that, let's go to stock price chart on Screener and let's see how this stock went up and down over the years. So let's click on Max, and if you start from, let's say, 2009 March, right? Now this looks like a very straight line if you look at now, like last 10-15 years of data. But if you notice, the fluctuation is there. It is not visible now because the timeline is very large. But if you notice the way it moves up and down, 10 to 20% going down from its peak is normal every year. Now it might look very fine in retrospect, but look at your portfolio. Whenever a stock goes down by 10, 15, 20%, what kind of thoughts start coming to you? You're like, should I sell this stock? Should I average it? What should I do? Because your focus is on the price. Your focus is not on the fundamental. And why the focus is not there? Because you have not done the research most of the time. You've just bought it on hearsay. Just someone told you and you bought it. So you are always in a fear what should you do? Should you buy more? Should you sell? Should you book the profit? What should you do? Right? So the focus is mostly on the price. And that's why most of the people are not able to have that multi-bagger, in their portfolio for most of the time. Right? So if you look at this entire stock price and just watch it very carefully, you will notice it has gone up and down almost every year to at least 10 to 20%, sometimes even more, right? If you look at this one, for example, August 2016, 993, it went down to 816 in same year, November 2016, within 3 months, right? Then again, look at all these ups and downs. 1227 went down to 1031 within few weeks rather. Again, looking at this 1462 in Jan 2000, yeah. So this was a peak which this company achieved somewhere in Jan 2018. It went up to 1462, and for next almost 3 years, it never touched this price. It's not easy to stay put. For next 3 years, this company did not touch this price. Almost 3 years did not touch this price of 1462. If you notice it, this is from Jan 2018 till if you go to November 2020, which is just 2 months short of 3 years, the price is 1444, not even 1462, right? So that's the kind of so someone who bought this company in, let's say, Jan 2018, looking at the past performance, looking at the fundamentals, they would have not made any profit for next 3 years. Yeah, and that's where the actual test of temperament and actual test of patience comes, right? And now you can see all this fluctuation going on, right? Now, the biggest thing which keeps you stay put in the company is research, right? And I'll tell you something more about that. Before that, let's come back to the screen. So you saw this data, right? So this returns would have been much more if I include the calculation of dividends which was received in last 13 years. But this is the calculation you see right now is without dividend, including the dividend returns. Yeah. Now, what do you learn from this? If you notice the volatility in the stock, the fluctuation is there. No matter how good the company is, no matter how fundamentally sound they are, fluctuation is like the basic nature of stock investing. You can't escape that. Right? And this is what people call risk. You invest at 100 rupees, it goes down to 70, 60, you're like, oh, stock market is risky, right? But if you think about it, this is not actually risk. This is risk is just a perception. This is, as per Warren Buffett, volatility is a long-term investor's best friend. Isn't it true, right? Because if you have knowledge and patience, you know about the stock, you know about the company's fundamental, and you also have patience at the same time, then you will use volatility in your favor. You will buy more when the stock goes down. It's like a sale going on. It's like a discount going on. But if you don't have any one of them, knowledge or patience, any one of them, this volatility will act against you. You have knowledge, but you don't have patience. So you will lose money even in a good stock. You have patience, but you don't have knowledge. So you will keep on holding stocks like Reliance Power. Yeah, so you have patience. You become a long-term investor saying, oh, I am a long-term investor. I don't mind, holding this stock even though it is in loss. But you don't have knowledge about that company. You should have ideally exited in loss and maybe entered in some other company and recovered your money rather than recovering your money in the same stock. So knowledge and patience both are required at the same time, right? And another quote by Warren Buffett, he says, risk comes from not knowing what you're doing. Yeah. So the moment you increase your knowledge level, the risk comes down and returns also go up. So it's not higher the risk, higher the return. It is actually higher the knowledge, lower the risk, and higher the returns. Yeah, interesting. Now, how typically, how people look at stock investing and how are they chasing the multi-bagger stocks and all. So I get these emails and posts and comments a lot of times on social media and on my emails. I get the emails that tell me a multi-bagger stock or tell me a few multi-bagger stocks. Now that's that's not even a valid question. First of all, no one knows. Whether it's me or anyone, no one knows which company will become multi-bagger, right? But my first question to them is, even if you get to know that this company is multi-bagger or there is a chance of this company becoming multi-bagger, can you hold it for that long? Can you hold it for 10, 15, 20 years? Right? Whatever I told you till now, how much attention did you pay to the word 13 years? 2009 till 2022, 13 years. How much attention did you pay to that? Most likely you were paying attention to the returns, to the number of multiple times, to dividends and to all the other stuff, right? But your mind was not going towards the fact that 13 years is not a small time. How did you stay put, right? So let's look at some more examples. If you look at Maruti Suzuki, it became 43 times in 18.5 years. Asian Paints 45 times in 12.75 years. MRF 146 times in 20 years. Now again, don't focus only on number of times, focus on number of years. How many stocks do you have in your portfolio which you are holding for these many years and you have knowledge about that stock, right? Knowledge and patience both, remember, right? Next, Eicher Motors 112 times in 16 years. Britannia 60 times in 17.5 years, and Pidilite 60 times in 12.75 years. Right? So the only way you can stay invested for 10, 15, 20 years in a company is when you have conviction on that company. The only way you can have conviction on that company is when you have knowledge about that company. And the only way you have knowledge about anything is when you do the hard work, when you do the research. There is no shortcut, there is no alternate. Yeah? So it's easy to say, okay, fine, you made 100x, or this company has become so much, wish I had invested in this company, wish I had invested in that company. Maybe you already have a stock in your portfolio, maybe more than one stock in your portfolio, which will become 100 times in the next 10, 15, 20 years. But will you hold it for that long? Yeah. One last example in this. Let's say you have invested 10 lakh rupees in stock A, and that company will become 100 times in next, let's say 15 years. Yeah, 10 lakh rupees you have invested. What is 100 times of 10 lakh? 10 crores, right? Now imagine your 10 lakhs becomes 12 lakhs. You start thinking of selling it already. 20% profit, not bad, right? It becomes 15 lakhs. Again, your mind is like, okay, now should I sell it? Or at least should I sell the principal amount? That's one other mistake people do, right? You can't do that in property. And that's why people have created wealth in property, right? 15 lakhs becomes 20 lakhs. You're like, oh, for sure I should sell it now. But to hold it at 10 crore, 20 lakhs will become 30, 40, 50, 60, 1 crore. 1 will become 2, 3, 4, 5. You will have, what chances do you have that you will stay put, you will stay invested in that company, even though your money has multiplied so many times? Forget about so many times, you usually look at 20, 30, 40% maybe. Yeah, most of the investors do that. They have this cutoff, 20% profit, sell it, book profits. And then you keep on dreaming and having this wishful desire that I wish I have a multi-bagger stock in my portfolio. Maybe you already have. Yeah. But knowledge is the only thing which will make you stay invested in that company. There is no other alternative to that. Now, I hope this made sense, and now you can rewire your thinking, rewire your approach into looking at how you can stay longer in a company by doing research, by having adequate knowledge about that company, and not getting impacted by market fluctuations. Market fluctuations will happen no matter how good your stock is. No matter how good the company is, the stock price will fluctuate. Yep, makes sense. Thank you so much for watching the video. If you like this, if you want to listen to more such content, please like, share and subscribe. When you subscribe, please press the bell icon as well. Thank you so much, and see you in the next video.